produced by Business Day, Nigeria's West Africa source of premium financial and the market intelligence in collaboration with ASOCO Insight. So this program will last for 1.5 hours, and it will be in two panel discussions. The first panel will be moderated by the CEO of ASOCO Insight, Mr. Rob, and while the second panel will be handled by the Managing Director of Business Day Media Group. So without much ado, I would like to hand over to Mr. Rob to take over from there and moderate the first panel. Thank you all.
Thank you very much, Brian, and welcome everybody to today's launch of the first research report covering the West African family business-owned universe. I want to emphasize the first of its kind. This has been a work 12 months in preparation, extensive data collection right across the continent by ASOCO Insights analyst teams, as well as the journalists and analysts of the Business Day Research and Intelligence Unit. We're extremely excited to officially launch the report today and to obviously hear from a number of seasoned veterans interacting with that family-owned business universe, if not part of it, on a daily basis, to hear their perspectives on sort of key developments, challenges, and opportunities that stem from that universe of family-owned businesses. A brief introduction of myself. My name is Rob Wittigan, co-founder, CEO of ASOCO Insights. We provide insights and engagement on Africa's private sector. We operate through a large team of analysts right across the continent. We cover over 30 countries to date, and we work with investors, corporates, and governments worldwide looking to engage with the many robust companies the African private sector consists of. As Brian mentioned, we've done this work together with Business Day, Nigeria's leading business media, with distribution right across the West African region, and obviously also online, digitally. And we've been tremendously pleased with the quality of their expertise and reach right across the continent, putting this report together. If I can move into a few preparatory slides to give a little bit of background around the report, please, Brian. There you go. If we can move on to the next slide, and I'll quickly elaborate on the methodology of putting this report together. I think, one of the key items to emphasize when talking about research on a family-owned business universe is that data is not readily available. That's the case for most privately held companies across the continent, but perhaps in particular for family-owned businesses who obviously come from a background of operating within quite a tight community of trusted, if not family-linked executives, and information, as well as interactions with external parties like media or research firms like Business Day of ourselves, is not always as abundant as it might be in other parts of the private sector. So the methodology we've applied here is quite particularly adapted to that universe. I'll jump onto the right side of the screen where I'll talk a little bit about our research approach. There's been a lot of in-country data collection. To be honest, there's no other way to capture data on this universe other than having people in country directly engaging with the family-owned businesses that have been subject of the report here. In-person interviews, as well as data collection from your typical data repositories like corporate registries or tax offices or export or promotion councils, what have you. We as a data provider have an extensive database as well that we've consulted in the preparation of this report. And as I mentioned, our partner Business Day with their team of journalists and analysts, as well as a wide source network right across the region, has been a pivotal part of the research approach here. That has allowed us to cover over 500 family-owned businesses right across the region, primarily in the 10 biggest ECOWAS countries. But within that 10, I think we see a predominance of a smaller number of the biggest economies in that region, in particular Nigeria, Cote d'Ivoire, Ghana, and Senegal. which constitutes over 60% of the population of family-owned businesses that we've looked at for this report. But we certainly didn't want to limit it to those economies alone, and we've looked at a number of surrounding countries, 12 in total, but to name but a few: Liberia, Benin, Togo, Guinea, Mali. We've really gone across the region to make sure we have a representative sample of all countries in that family-owned business universe. A couple of sectors we haven't deliberately focused on a select number of sectors, but a couple of sectors dominate in the data set. In particular, the agribusiness and services sector, in particular around trade. We'll over the course of the panel discussion, we'll get into the nature of the sectors that these companies operate in a little bit more. But what's been evident from our data set is that agribusiness and trade-related services dominate, and to a smaller extent, manufacturing, FMCG, and oil and gas. In terms of company size, we've focused on companies at a minimum with a minimum annual turnover of $10 million and up, with some exceptions. In some cases, particularly in the smaller countries where there aren't that many businesses of that size, we've looked below it. But overall, we've looked at sort of your mid-size threshold of $10 million and up, all the way up to companies 10, 20, 30 times that size. Next slide, please. Key takeaways from the report. I want to emphasize that the purpose of this report was not to produce a scientifically underpinned set of conclusions. This report is descriptive in its nature. Its goal is to put a spotlight on a universe of companies that we all believe to be robust, of significant economic size, and also underreported from a data availability standpoint. So descriptive in nature. That said, three takeaways jump out just from the report itself and from the numerous interactions with family-owned businesses that we've had over the last 12 months. First is resilience. I think one thing that the family-owned businesses share is a long-standing history in the region, deep roots. Over 50% of the companies we've spoken to are in the second or third generation, as the timeline on the slide shows here. The companies preceding establishment in the year 2000, so those are companies over 20 years old, constitute 50% of the data set. Drivers of vertical integration, in particular from a genesis in trade to vertical integration into processing and or manufacturing. Now that's been particularly the case in the recent months of the pandemic, where all of a sudden PPE and related manufacturing was needed in the region. And were the family-owned businesses that may or may not yet have had a footprint in processing and manufacturing that stepped in to provide for exactly that need. And I think another hallmark of their resilience is the commitment to local markets. Obviously, these are the home markets of these businesses. When the going gets tough, these are the businesses that keep going. Whereas a multinational with other markets to fall back on, or a foreign investor with an ability to reallocate their investment funds, the family-owned businesses we've spoken to are dependent on and committed to these markets that they're operating in, which also constitutes a large size of their resilience as far as long-term planning and execution is concerned. I think a second main takeaway is the progressive nature of these businesses, particularly at the levels of female ownership. Over 50% of the data set we covered in this report has a female owner, a female leader rather, not always the owner, but a female leader, which is comparatively to the non-family-owned business universe, it's a significant step up, where that percentage lies much closer to the early 20% percentage points. So progressive in that nature. Also progressive in terms of a driver of innovation and impact. When we talk about innovation in a West African context, we're often talking about Nigerian fintech startups who are doing really great work. But what we're overseeing is that a large chunk of that innovation also comes from a larger, more established universe of predominantly family-owned businesses. Again, these are operators that know the ins and outs of their local markets, are going through generational handover. New members of the family come in with IDs picked up from outside of the region or picked up from developments around them. And this is starting to make an impact in how these businesses are run. Similar on the impact side, we're seeing significant levels of impact on environmental, social, and government standards, more and demonstrably more than a non-family-owned business. That again, this is with that long-term commitment to local markets in mind. Clearly, operators of these businesses know that they're in these markets for many decades to come. And the need to operate with a double bottom line is more outspoken here and more evident here than it might be in other segments of the private sector. Finally, and this is a good segue into the panel that I'll shortly announce, the potential that the family-owned business universe presents. This is, as I mentioned, a robust group of companies that most of whom are economically performant. But also haven't necessarily engaged with external financiers as much as they could, in particular when it comes to private financial markets like private equity firms, but also to a lesser degree with public financial markets like stock exchanges. So there's a tremendous potential there for other sources of capital to make a mark. And there's a growing appetite from the executives of the family-owned businesses in question to engage with that type of capital. And the last point on potential is obviously very much within the context of increasing our intra-African trade. These businesses are expected to make the biggest impact on driving that intra-African trade. Again, the understanding of local markets, the desire to grow across borders is most strongest pronounced within this universe of companies. And therefore, expectations and potential is quite high as far as what the next few years can bring. With that, I want to tee up the discussion for a panel that I'm extremely excited about to announce. And Brian, if I can ask you to take away the slides and go back to the camera view. Thank you. Because we have invited a group of panelists with extensive experience right across the region, and in particular with regards to family-owned businesses. I'll keep introduction short because we want to get to the questions, panelists. I hope you'll forgive me, but I want to do the positions and the experience justice. Starting off with Mr. Frank Egbogun, publisher of Business Day, and very much our partner in this exercise. Secondly, Adrian Mayer, partner of Charles Russell Speechless, an international law firm heavily engaged with family-owned businesses in general, but in particular in Africa, having done extensive Africa experience in over 20 countries. Charles Russell Speechless is a strategic partner in the report. Thirdly, Abiola Ojo Osaji, senior partner of Africa Invest, a private equity firm, one of Africa's largest private equity firms, I should say, with a sizable number of family-owned businesses in their portfolio. We have Olumide Bolumole with us, the head of the listing division of the Nigerian Stock Exchange, obviously with an interest on bringing the family-owned businesses right onto West Africa's biggest exchange. And last but not least, Ronald Shuguri, director of Shuguri Group, a family-owned business, and vice chairman of South Energix, the company behind the landmark project Eco Atlantic, just off the coast of Lagos, a massive rural development or urban development, sorry, I should say, with a lot of investment interest and potential. Ronald, thank you for joining the panel. Great. So that behind us, I'm going to jump right into the questions. Abiola, first question to you. What, from a private equity perspective, is the real strategic value in a group of family-owned businesses?
Okay, thanks, Rob. I hope you can hear me. And thanks for having me on the panel. I'm really happy to be here. So for me, as you alluded to in your presentation, we know that family-owned businesses actually form the fulcrum of SMEs, as we call them. And these, in turn, form the backbone of Africa's economy. So as private equity investors that seek to create wealth and the necessary impact on the continent, family-owned businesses would always remain a very important contributor to this mandate. So, and what do we see in them? They actually provide us, and they provide a unique pedestal because of their ability to respond rapidly to changing market circumstances, which gives them flexibility to take advantage of opportunities and obviously be able to address emerging risks. I mean, I'll speak specifically to us in African Invest. As you know, I mean, more than 50% of our over 160 companies are really family-owned businesses, medium-sized enterprises. And with our quarter-century experience, what we have come across, we've come across talented family-owned business leaders who want to grow. They really have the passion to grow, but they just sometimes don't know how, even though they bring a lot of expertise about their businesses, their markets. I mean, what you could call the family advantage or the family business edge. But what then they need is a partner that can help them in the execution of this strategy, which can be valuable. So what we see therefore is that family-owned, what we also see therefore is that, you see, family-owned businesses also seem to be in a precarious situation. And by that, what I mean is that sometimes, and really most times, they are not able to source the funding they need to grow their businesses from traditional sources for a myriad of reasons. And as a matter of fact, this is the real reason why we started the group African Invest, because we noticed this gap. So these are some of the reasons and some of the attractions and why we find family-owned businesses very, very valuable and a good partner for us on the continent. Thank you, Rob.
Thank you, Abiola. Adrian, having extensively interacted with the family-owned business universe worldwide, but in your case in particular for Africa, what is your impression of the international investor interest to that space in particular? Adding to Abiola's comments. By the way, Abiola, I like your terminology of the family business edge that you underline. I think that's a really strong and compelling one. Adrian, in your interaction with investors, is that something you recognize, and do you have any additional point of view to that?
Yeah, no, I do recognize that. Thank you, Rob, and thank you for having me on the panel this morning. I just want to add to what Abiola said, and just add to this. Private equity is looking at family-owned businesses because they've got that family business edge that Abiola talks about. They have the existing business infrastructure. They have a knowledge of the market. They have deep connections as well within the infrastructure of the country or the region that they're operating in. And often they'll have a knowledgeable management team. And these are sophisticated businesses, and they know what they're doing on the ground in their various regions. So that is hugely attractive to private equity businesses, looking to deploy funds in an effective way. And I think it's almost that some of the groundwork has been done for these private equity firms with the sophistication and depth of experience of the family business environment. So I think it's a hugely compelling partner for private equity, is the entire family business universe.
Fantastic. Thanks, Adrian. Ronald, I want to switch to you because you're taking the seat of the family-owned business operator on this panel. Which makes for an interesting discussion, because it's all good to hear from the private equity guys how great of a potential family-owned businesses offer. But from your side, and perhaps let me start with just your views on the financing landscape, comparing the access to private and public markets for West African, Nigerian family-owned businesses today to a period 10, 15 years ago. How has the landscape evolved from your position?
I mean, it's been a very rapid evolution in this landscape over the past 10, 15 years. The way finance was approached, I'm going to use the example of Nigeria, maybe 15 years ago is radically different than how we approach it today. Specifically in real estate, for example, the way leases were structured, the way appetite from investors was done, and which is great because it opens up significantly access to capital on one end, and on the other end, it also forces family businesses to step up on the governance side, for example. And by doing so, it's helping us grow in more efficient ways, and at the same time, it also helps us have different discussions with potential investors. As a group, we've been constantly improving the governance and really stepping it up in the past few years as well. And this allows us to open up conversations with private equity firms and other kind of firms. We've been seeing a strong interest lately from family offices out of Europe, for example, and which feels a bit new to us, considering that it was not maybe a pool of funding that we even discussed with maybe 10 years ago.
Thanks, Ronald.
We keep hearing of there's a very strong interest for Africa, for funding in Africa. And sometimes we wonder, yes, we know their funding is there, we know but there's so many sources that we may not even know of. And Africa is a big continent, and every country is very specific, and every industry is very specific. So it's also how do we then present bankable projects to potential financiers. And I think this is where we're now at, maybe 15 years later from this beginning of an evolution.
Got it. I want to talk a little bit more about that meeting in the middle, because as you say, Ronald, there's growing availability of capital, and there's growing deals available, but obviously it's about deal finding opportunity. Just a quick housekeeping note. I should have done this right at the start of the conversation, but I'm getting a lot of requests for questions to come through. We can do that on slido.com #FOB, and then you can drop your questions there, and the business day team will send them on to me, and we'll have a few minutes at the end to ask them. So again, to repeat, slido.com #FOB. Thank you. So just continuing on the conversation of matchmaking, essentially, between bankable projects and private equity capital in this case. Ronald, I think you make a very valid point of there being a lot of headlines, increasing number of headlines of non-African private equity funds coming to the continent, announcing big numbers of funds that they're looking to deploy. But from an FOB perspective, not quite sure how to interact with those investors, or to understand exactly what it is that these investors are looking for, or how that matches with the projects that might be available on the continent. Are you seeing, ultimately, I suppose this comes down to a good understanding of the local operating climate on behalf of the investors, and a good understanding of what drives an investor's interest on behalf of the FOB executive? Are you at a high level, are you seeing a better alignment of those two positions, and what from an FOB perspective perhaps can be done to further align with that?
So first thing is, we also have to stick our necks out and say we're basically interested in funding, and that's basically that would be the natural first step. Once we do that, then it's also, I mean, we've gone through the experience of actually understanding what different funding sources look like, what private equity firms are interested in, what family offices are interested in, what very long-term investors are looking in, and also what do they need on our end in terms of governance, in terms of returns, in terms of timeline. And that allows us to then structure projects, that structure our companies in specific way that make it very investor friendly. That's basically what we can do on the receiving end. But then it's also by starting conversations, it allows us to then meet we've gone to a few conferences where we were very surprised by the kind of funding sources were available for the continents. And it's just that we feel it's at its very beginning of a very, very long and it's a very, very large field. I mean, the continent is very big, and the amount of funding we need to develop the continent is going to be astronomical, and that's just the beginning of a very, very big opportunity.
Got it. Adrian, can I ask you, for wearing your advisory hat, what are sort of the key recommendations to a family-owned business looking to access that private capital, particularly from overseas markets? What are the key areas where they can best prepare themselves, that they should pay attention to before being ready to sit in front of that investor?
Yeah, thank you. I just would echo what Ronald was saying actually about how family-owned businesses are forced to put themselves in a position where they're ready to be looked at in detail by investors. I think it's an interesting dynamic. And as a legal advisor, we often help clients get themselves ready for that investing process, because we often, when we're advising the investors, we see the downside of not having been prepared, because that can have a negative impact, as I'm sure Rob will know, not maybe personally, but anecdotally from other businesses, that can have a negative impact on pricing if someone's disorganized or not ready. I think family-owned businesses need to have a clear idea of what money they want, or what investment they want, or what they need it for. In other words, they've got a plan and a strategy. So you have to know what the ask is, and that's a difficult question in and of itself, actually. So that's the first challenge, I think, is to work out what the ask is. The second challenge is to find the right source of capital. And one of the things I would recognize from the comments that were already made, it's the financing landscape across the region, and particularly in Nigeria, because it's the biggest economy in the region, is the source, the different specialisms of capital now. So in the old days, someone would say, oh, I've got a fund for Africa, I'm going to go invest it. And now it's actually, I've got a fund for technology in Lagos, and I'm raising money for that. So capital is a lot sharper and a lot more focused, and so that helps family-owned businesses in particular sectors to target certain pools of capital from different parts of the world. So having done that, then you need to understand 3 or 4 things, I would say. The first is, how does control work? Who's going to have the driving seat? Who's driving the bus? What's it going to look like? Is there a cultural fit? I think is hugely important. I mean, these are privately owned businesses, often in Gen 2, Gen 3, with traditions, with routines, with methodologies. And there's usually a very, very loyal cultural body of men and women working within these businesses. And that's really, really important to patriarchs and matriarchs, I've found. And rightly so, frankly. The other thing is, what's the cost of the capital? What's the cost of getting into a relationship with an investor? And finally, what's the exit? I mean, everyone jokes about, you can tell private equity people at a party because they walk into the room backwards because they can see the exit. But it's truism, because you need to know what the ultimate route of the exit is for the family and also for the investor. I mean, the investor's not doing it out of the goodness of their hearts. They will make a return, and the recognition of that is important.
Thanks, Adrian. Before I go to Olumide and Frank, Abiola, I want to come back to you for a second, because obviously we've just spoken about, I guess, the key ingredients of what constitutes a good deal between a private equity firm and a family-owned business. Most of which you'll recognize, if not deal with on a daily basis. I want to talk about the cultural fit that Adrian emphasizes in particular. There's this stigma around private equity being Wall Street or London City guys that arrive with fat suitcases of cash and are looking to make an optimal exit 5 years down the line. Clearly, that's no longer the picture as far as successful private equity firms in Africa is concerned. Can you describe a little bit your observations and your experiences of how private equity has adapted itself to a particular African, West African, Nigerian context in order to secure that cultural chemistry really exists between investor and portfolio company.
Excellent. Thank you. Thank you very much for this question. And I was laughing when Adrian said private equity, they work backward, thinking about exit. Adrian, that was interesting. One thing I just want to say on the point Adrian made before I just delve into this is that, yes, private equity firms would typically like family-owned businesses to be investment ready as much as possible. For indeed, there might be a correlation between that and valuation. But I think the most important thing that we look out for is really transparency. We just want you to be transparent with us. As long as you can have, you are able to demonstrate willingness, to execute some of those core structures that would ensure that your business becomes sustainable, and you want to institutionalize the business, those conditions can become subsequent, what we call conditions subsequent. So yes, we want you to be ready, but if you're not ready and you're willing, even, you're a good candidate for PE fund. But talking about adaptation to cultural nuances and all of that, I think that's such an important element and one that should not be taken for granted in the context of investments. Most FOBs actually, when they open their doors for funding, they actually want to be able to say that I'm going into a relationship, and it's really a relationship in the true sense of the word. It's like a marriage, and so the expectation is that you will spend time together, you will be able to build trust and transparency, and you'll be able to explain some of the implications of the proposed partnership that you're going into. And so that means that you have to be able to feel their pulse and have a consultative approach to investment. It cannot be a sprint. Sometimes it's a long drawn process, but that period of courting is actually time that is well spent. And it's one that you have to basically be in proximity with these companies because they want to trust you. They want to have a relationship. And for us, that's the model that we have deployed. So you find that we are actually present and we're local in these markets that we serve, because we do not want to have a situation where we're perceived to be, foreigners. We want to be local. And that is very important to the psyche of family-owned businesses. They want to be able to know that you are there for them and you are going to be able to support them. So essentially what I'm saying here is that making investments in family-owned businesses in order to be able to adapt to local nuances or cultural nuances would require a deliberate, intentional, and collaborative effort, whereby you sit across the table and you're able to discuss and you're able to align purpose, you're able to align strategy, you're able to ensure that there are no, divergent views. And when there are divergent views, you are able to resolve them upfront. So I think these are some of the areas that are very key. Those are things that have helped us. We've seen a lot of family-owned businesses take transactions off the table and make it very exclusive because they feel like you understand them and you understand what they're going through.
Thank you, Abiola. Frank, I want to switch to you for a second as publisher of Business Day, overseeing obviously a team of journalists and analysts that are interacting with the private Africa's private sector on a day-to-day basis in general, but family-owned businesses in particular. We're discussing how gradually we're seeing at least a subset of these family-owned businesses opening up to new sources of capital in order to get on the map of an investor or to build a narrative around investment of a business. Interaction with the media is of critical importance, obviously. From your perspective, how is the openness and the willingness to engage with business media such as Business Day from a family-owned business perspective evolving in recent years? Are you seeing a higher interest to engage with your journalists, to put their names out there than we might have seen some years ago? What are your overall observations on that topic?
Rob, thank you very much. Yes, I think we're seeing a change that is positive in terms of the engagement between the family-owned businesses and the media. And I'm sure that there are a number of reasons why this change is occurring. Firstly would be that as has been alluded to by previous speakers, many of the family businesses are now aware that they have a responsibility to prepare themselves for injection of new capital, to prepare themselves for prospective investors. So that's one element that I think is driving this change. So they have there is now a willingness, to be more forthcoming, to be more open and transparent, given as has been said earlier, that transparency also counts in their favor. Secondly, there is also the rising competition for market and competition for capital that I believe is also driving the increased willingness of family-owned businesses and indeed the private sector in Nigeria to engage with the media, to tell their story, to better position themselves and ensure that no one is telling their stories better than themselves. Finally, I also believe that there is the infusion of new knowledge into the businesses with children who are coming back mostly from Europe and America with decent education that are being injected into the businesses and as such are presenting a more progressive face of family businesses and indeed the private sector in Nigeria. So that would be my view, a good development, a change that is positive, one that I think the media has waited for a while, which we now surely must take full advantage of in the media.
Absolutely. Thank you, Frank. Olumide, I want to bring you in on the conversation from a listings perspective. You're heading up the listing division of the Nigeria Stock Exchange. We're talking about this evolution and the gradually, I guess, growing appetite for new sources of capital from this family-owned business universe. What impact has that had on the number and the quality of listings on the Nigerian stock exchange? And what are you planning to either build on that or to improve on that?
Thank you, Rob, and thank you for inviting me to this panel. So indeed, we've actually seen, if I could start the conversation around this, some of the things that Abiola mentioned earlier about family-owned businesses that are looking to scale in some way or form. One of the things that we see that's quite important is access to capital as being part of that. And it really depends on the stage of the company. The stage, whether the company is 20 years old or 30 years old, whether it's the co-founder that's still driving the business or perhaps the next generation driving that business. But in terms of quality of listings, what we've seen is the more established and the larger family-owned entities, as part of their broader strategy for regional expansion and regional growth, those companies are looking to listings as a way to, one, attract capital, but perhaps more importantly, to establish credibility and visibility that supports the regional expansion conversation. So indeed, we're seeing more companies, more larger established companies that are using listings as a platform to attract capital and also perhaps use it as a springboard to get into other markets. For the smaller tiered companies, the less established family-owned businesses, one of the things that we're seeing them is consider the access to capital route. But some of the challenges we've experienced is there's perhaps not enough understanding of what it means to be a public company. I think there's a lot of concern that by being a public company, you lose all control and you lose all input in the strategy and the direction of the business. And one of the things that we're doing quite extensively at the exchange is to hold their hands and walk them through that process. That by being a public company, there are certain benefits and you don't necessarily have to lose all control of the company. Indeed, some of our largest listed companies that have listed in the last decade or so are still predominantly owned by families and are leveraging the platform of a public listing to grow their strategy. The other thing that we're working on is listening to family-owned businesses to understand some of the challenges of being a public company, and then we're adapting our rules to sort of address some of those challenges. Quite recently, we launched a board that is designed for businesses that are perhaps in the earlier growth phase of their cycle, and tailoring our rules such that the investors who have appetite for to participate in investments in growth companies can get the opportunity to participate and invest in companies like that. So we've modified those rules for them to be a little less stringent, for it to be more supportive of the phase of development that some of these companies are. So those are a few things that we're working on, but mostly it's around education, it's around engagement. We spend a lot of time talking to companies, and indeed we realize that not every company is at a point where they are ready for public capital. And we see, for instance, engagement with private equity as collaborators for that, because we may find that companies are perhaps in a better phase in their cycle for private equity that can then look to a public exit at some point.
Yeah, that makes a lot of sense. Great, thank you, Alu. I want to move to a last question from my side, and then take some questions from the audience. This is more outside of the fundraising space, but more looking further down the line as we look at recovery from the COVID-19 pandemic. We look at ambitions to pursue Africa's intra-African growth agenda. I'd like to understand from a few different perspectives how we see the role of family-owned business, particularly on those two topics. Ronald, if I can start with you again as the operator on the table, what are the unique advantages of family-owned businesses to significantly contribute COVID-19 recovery and to drive an intra-African trade agenda?
We've, as a family business, I mean, we've gone through through different crises throughout our time over the past 40 years. And what we've learned is how to navigate these crises better and better. And as a family business, we're very rooted in the country that we're in, and we're very invested, and we also very much care for the welfare of the country. And so we don't just pack up and leave as a family business. We have to stick through difficult times, and we have commitments, and we have to stick to our commitments, and we just have to learn how to navigate better. So post-COVID, we remain very rooted in Nigeria as a main location, even though we are now exploring other countries. And at the same time, we have our teams in place, and we have to just push through, and we have to adapt to the post-COVID-19 world. And post-2008, we adapted, and that made us more resilient. We have the agility to adapt pretty fast and become resilient. And post-COVID-19, I think it's going to make us even more resilient moving forward, and even more efficient in how we develop the businesses and how we keep on reinvesting. And Nigeria being a country of very high growth in terms of population, in terms of just different industries that are coming up and that need to be invested in, it just roots us even more, these sort of events.
Absolutely. Thank you, Ronald. Frank, I want to turn to you for the same question. Obviously, having a 360 view of the private sector right across Nigeria and the wider region, what particular expectation or role do you attribute to the family-owned businesses in your part of Africa as far as helping Nigeria and the rest of the region through the COVID-19 recovery, as well as progressing on the intra-African trade agenda is concerned? Oh, Frank, I think we've got you on mute.
So sorry. Ron has already alluded to the resilience and agility of family businesses in the sub-region. And I think these are very critical elements helping family-owned businesses. And there is also the deep knowledge of their markets. And I think for me, it's critical. All of this will help post-COVID recovery and make it perhaps even less painful, and perhaps happen at a faster pace. the fact that the family-owned businesses see themselves as African, that they tend to be regional in their focus, especially given their overwhelming understanding and knowledge of the market. I think all of this will drive intra-African trade, especially in the age of Africa. I believe that even in the past, relationships were being established already across national frontiers, and I think we should be able to see more of that going forward to promote intra-African trade. And of course, the point that I made earlier about the injection of a new generation into these family businesses with a more progressive outlook, I think all of this bode well for Pan-African trade going forward.
Thank you, Frank. Yeah, and on the, I'm just looking at a couple of questions coming in from the audience on the injection of new ideas in the running of family-owned businesses. There's one question here, Ronald. I'll come to you first on this. There's a question around not only how West Africa's family-owned businesses are looking at new sources of capital to bring into their own businesses, but also how some of them might be becoming an investor themselves, particularly in the venture capital startup space, which Nigeria is offering an increasing number of opportunities in. And you don't have to speak about your Guri Group in particular, but what sort of trends do you see across other family-owned businesses, perhaps to also take that role on as a funder, as an investor in some of these promising startups that are sprouting up all across the region?
I think it's a great place to be investors. I personally had a couple of very successful early investments in some tech startups, and this was really very, very high level, very light touching into this. But moving forward is that yes, small businesses, startups, and other kind of, it makes sense for family business to also start having some sort of involvement, and eventually maybe even having a system of how we invest. Not only invest, but also providing a sort of infrastructure to help these startups grow in the market. And that's something it's a bit of a also personal ambition at some point to get to. It's to be able to have that structure to help young entrepreneurs or new entrepreneurs be able to spring up and have a successful business.
Absolutely. Adrian, from your perspective, sitting down with family-owned business owners, is an interest to allocate some of the capital, some of the wealth that's been generated over the years towards a venture capital allocation. Is that something you see here and hear more of?
Yes, it is, and I think it often comes when there's a more established aggregation of wealth within the family, whether it's through a family office or through some other corporate arm of the family. And I think it's also not only in venture but also in philanthropy and foundations and giving. And I think that's a really, really important part of the family-owned business environment is the impact that they can have on the philanthropic approach to life in general. And just circling back to one of the things we were talking about earlier, Ronald was talking about the role that family-owned businesses can play post-COVID. I think one of the unique things that I love about working with family-owned businesses in Africa and also in West Africa is the ability they have to generate huge loyalty in their workforce, and the sense of family and the sense of collaboration that is achieved, I think, is astonishing. And I think the way that family-owned businesses nurture that loyalty within the workforce sets an example and creates a confidence, which I think creates an upward virtuous circle, which helps in confidence and getting out of COVID. And I think the corporate programs around healthcare, for example, can be really, really important, energizing ingredients for getting out of COVID, which obviously is based on vaccinations and lots of other things. But confidence and setting an example, family-owned businesses have stolen a march on quite a lot of others.
Great, thank you, Adrian. Last question that I'll put in front of all of you, and then we'll have to wind things up. Unfortunately, it's been a good discussion thus far. So sticking to that role of a family-owned business as an investor, I'd like to ask you a quick question that I want to get a quick answer on. What is the most likely sector that these family-owned businesses will be investing in, provided they have investing ammunition over the next 3 years? What is the key sector that you think these businesses could make their mark in if they combine their intimate knowledge of the continent, the capital that they have as build up as businesses, and the ability to succeed as a business expanding into new territory? Ronald, again, I'm going to put you on the spot first, and it sounds like you've already started your investment journey, so maybe this is an easy one for you. But what is the key sector that comes to mind?
I will basically add a bit on what Adrian just said, basically regarding philanthropy. So I would even look at it from a different angle. And post-COVID, actually, even COVID allowed us to even focus more, is the word impact. It's having social impact and environmental impact elements in all our new projects. And I see that there are very a financial sustainable way to actually invest in projects that will have a strong social and environmental impact, which would I believe make our businesses more resilient. So if I want to look at what sort of businesses, infrastructure is something we're very big on and we are very bullish on. But at the same time, also anything related to green energy, green efficiency, and also projects that would provide social impact. Adrian mentioned healthcare programs, but yes, healthcare is a very big sector. Education is not a big sector, and these are sectors we are definitely looking at.
Fantastic. Frank, can I ask you the same question? Where do you see family-owned businesses making their investment mark over the next few years?
I see technology as being attractive. I also see the health sector, as Ron has already mentioned, and thirdly will be real estate.
Great, thank you. Abiola, you're muted, Abiola. Same question to you, and this is a little bit of a different one than the question you might normally ask your potential portfolio companies. But where do you think family-owned businesses can make their mark, investment expansion wise, over the next few years in the region?
So mine is a different perspective, because I'm actually live in this question, such a beautiful question, Rob. Today, we have an innovation fund, and we've been invited a couple of times to co-invest with some of these family-owned businesses. Incidentally, some of them we had invested in as traditional businesses. And what we are seeing is that they are not typically, they're sector agnostic, actually. Obviously, a lot of fintech is interesting. We've seen the unicorns that have emerged from Nigeria. But what they are looking at, they're looking at businesses that can complement the existing traditional businesses. That's what they're looking at. So businesses that would help the current business that is really brick and mortar established become more efficient. So what they do, or what we've seen them do, is that they actually incubate some of these businesses. They kind of give them seed funding, and they kind of incubate them over a period of 12 to 18 months to see what they come up with to help their current businesses do better. So it's not, for us, it's just a myriad of sectors. So it's not fintech, it's not health, it's really what can come out of this innovation that would help our traditional businesses become nimble, efficient, and serve the customers better. That's what we're seeing.
Thank you, Abiola. Olu, switching to you. I'm going to give you the option to answer one of two questions. Either the one that is doing the rounds now, where do you see FOBs making their mark from an investment perspective over the next few years? The other optional question is, where from a listings perspective do you see most FOB listings coming from? Like what sectors in particular do you think offer the best potential family-owned businesses to enter the financial market?
Okay, I'll try to answer both, but very briefly. So the first question, from what we're seeing, and indeed, it really depends on the phase and the stage of the family-owned businesses. So for the businesses that are, perhaps in the first generation, within the first 10 to 15 years of their growth, and they're still in the growth phase, those businesses are investing in what I call value chain opportunities. So if you do a deep dive in a lot of family-owned businesses, what you'll find is there are often groups of companies that move into areas that have some complementarity to their existing business lines. So for instance, if you're an agri-business, then you're an agri-processing business, then perhaps you want to backward integrate into some version of farming, and then if you can upward into exporting. So for the less established family-owned businesses, those are the sort of opportunities that we're seeing for investments. Now, for the more established ones, what you'll find is, like Adrian mentioned, there's increased activity in the family offices space, and family offices are consider themes around sustainability and impact, like Ronald mentioned. So we're seeing some of that, but increasingly we're also seeing individuals. So perhaps not on an institutional basis, but some of the members of the family are doing more increased investments in the technology space, largely because it's been trending of late, and there's a lot of opportunity in that space. Now, to answer your second question, we see a lot of opportunity in the agri space overall. There's a lot of companies that are doing significant business in the agri space, but perhaps need some hand-holding to get them public market ready, and perhaps even private market ready. So we see that the agri space, certainly in Nigeria, is an area that we should see some growth from the listings perspective over the next 3 years.
Thank you so much for a very, very, very to the point answer, Adrian. Last but not least, and after that, I'm going to hand it over to Dr. Ogo Okiti. Heads up.
Thank you. I think I'm going to be rather counterintuitive, I think, and maybe disagree with some of the panelists, because I think actually what I think they'll be investing in over the next 3 to 5 years, the family businesses, that is actually themselves and their own sector. I mean, they'll be focusing and pulling down on that, I suspect, to make sure that it's fit for the next generation. And I think they should be investing in embracing the sort of digitalization and technology in their own sector. And I think the family businesses that you've reviewed and are sectorized in this report are, around agri, manufacturing, consumer services, and oil and gas. Yes, that'll be where the investing is, but I think each family business will be looking at itself, I think, to see how it can improve itself. And I think it will be doing that. The other thing I think they'll be investing in is the next generation. They'll be looking to the next generation to bring them on. We've already talked about how they bring new ideas, and I think it would be remiss of any family business not to do that in the short to medium term.
Thanks, Adrian. And with that, I want to wrap up this panel. I should quickly mention to everybody in the audience that the report that we're launching right now is about to be sent around by email. So every audience member on this listening into this panel will receive an email with a direct link where the report can be downloaded. If you're not receiving that link, please email info@asocoinsight.com, and one of the team members will send that same link to you. We hope you'll enjoy the report. Please let us know your feedback. Dear panelists, I want to thank you for your time, your wisdom, and look forward to everybody's thoughts and feedback on the report once again. Thank you, everybody, and Dr. Ogo, over to you.
Thank you.
Thank you.
Thank you so very much, Rob. There's no doubt that our audience, we enjoy reading the report. It's very, very comprehensive. And I believe there are key lessons there for everyone, either running a family business or managing a family business, or involved in one way or the other in raising capital for family businesses. And we thank all the panelists for that session. So we are going to move very quickly to the next panel, but it's just a very, very brief panel. We're going to be looking at just another area of family-owned businesses. But before we do that, let me introduce you to the two panelists I have. I have Olayinka Oluacha, who is the senior manager private clients and family wealth Andansi Tax Nigeria, Andansi Tax Nigeria. Olayinka, welcome to this session. I also have Abiba Ali, who is the founder, managing director, and CEO of Society Renewable Energies. They are the two panelists I have here this afternoon. So our focus here is evaluating the roles of family-owned businesses in national wealth creation. That means how do family-owned businesses actually contribute to the economy or to the wealth of the economy? I will just limit our conversation to two areas. One is in terms of generation, and of course, the second is in terms of the structure. So those are the two areas I want to limit our conversation. So if I will start with you, Olayinka, is there anything unique about Nigerians' own family businesses? I mean, perhaps you have looked at other family businesses, whether globally, other countries in Africa. Is there anything that you think is unique about family-owned businesses in Nigeria? Maybe from the perspective of moving from one generation to the other, or in terms of structure?
Okay, thank you very much, Dr. Ogo, and thank you for having me on the panel. So just as it's been previously discussed so far, in Nigeria, I believe that there's a huge potential for investment in family-owned businesses. I believe also that if you actually take a cursory look at the sector of the economy, at the major players in this sector, you'll find that at the helm of affairs and also the ownership of these major players, the business are actually owned by families. And that goes to tell you that what's the value that these companies bring to the economy in terms of taxation, in terms of creating employment opportunities, in terms of boosting of forex from their export sales. So in looking at Nigeria, I would say because there isn't so much awareness as to how these companies are and how they are thriving and how successful they are, it creates a huge potential for investment, for investors to actually come in and even invest in these businesses. And in terms of talking about structure, now I understand from my experience that a lot of these businesses are actually now being more aware of what they need to do, because when you have a family business and you have a regular business, the workings of each is different, and what you need to do to ensure that your business as a family business thrives is different from what you have in a business that is not family owned. So in terms of that kind of structure, families, business in Nigeria are now kind of aware of these things and are starting to put in place necessary structures, necessary mechanisms to ensure that their business is to ensure transference of the family business itself to succeeding generations. Is just the opportunity to invest.
I think we're having challenges with your network, I think.
I don't know, Gigi.
Is it? Should I move to Abiba while you try and sort that out? Or can you hear me very well?
Yes, I can hear you. I don't know if you heard me.
Okay, I can hear you now. Please go ahead.
Oh, okay. What I was trying to explain earlier on was to talk about Nigeria and the uniqueness of Nigeria. So like I said, in Nigeria, for example, if you look at the major players in the economy, you see that at the helm of affairs and the ownership of these major players in the key sectors, the business are actually owned by families. So whether even coming up from an SME up to big conglomerates, you see that a lot of these businesses are actually owned by families. And what has now been contributed to the economy in Nigeria is in terms of taxation. They've helped to boost taxation revenue for the government. They've helped to increase employment opportunities. Most of these companies, if you look at the labor workforce presently, a lot of these companies are employed by family-owned. A lot of this the labor workforce is employed by family-owned businesses. In addition to that, they've actually formed a base. They actually have a form of national wealth a base for people to actually come in and invest in the country. So what I also added earlier on, I didn't know you didn't hear me, was that these companies have potentials to grow, they have potentials to expand. And with this, especially with the program that you're having and with this launch, perhaps investors can actually be able to identify these opportunities, even in family-owned business in Nigeria. And in terms of also, from what I've been seeing in my own experience, I've seen now that a lot of family-owned businesses are now better aware of what they need to do to keep their business in order. Because the way a family-owned business is going to be run is different from how a non-family-owned business should be run. So family-owned businesses are now kind of aware of the structures they need to put in place, of the measures they need to put, of the mechanisms they need to put in place to ensure sustenance of their business and transference to future generations. So Nigeria currently has huge potential for investment, and I see that stands us out.
Thank you very much, Olayinka. Abiba, I'm going to follow up on the question I just discussed with Olayinka. But the dimension I want you to come in, you run a family-owned businesses, and whether it's globally or in Nigeria, you can even say that all families usually, all businesses started as family businesses.
As family-owned businesses, yeah.
Whether it is the Unilever, whether it is the Nestle, I mean, they all started as family businesses. So, but if you situate that in the Nigerian context, and you look at what has happened, for instance, translating family businesses into either global brands or into large-scale businesses listed on the Nigerian Stock Exchange, you will notice that the pace of that has not really, the pace in Nigeria has been rather slow. So the question then is there a template or a pattern that we can say, oh, if you're going to succeed as a family business and become maybe even a public company, is there a template or pattern that we say, oh, this is what you must follow in order to make it successful?
Thank you very much, sir. It's great to be here. And I would like to say that, in my opinion, most businesses start out as one person who decides that, you know what, there's a need here, and I think I have a solution to fulfill that need. And then it transcends to, you know, that person owning that business as a baby. You know, it's like giving birth to a baby and you don't want to let that baby go. I mean, even when the child is old enough to get married, you don't want to let it go. And that is when it starts becoming a family-owned business where the owner has to now start thinking, are the children going to take over from them? Is it going to expand to other members of the family? For us at SOSE, one of the things that has been very good for me is that when I started, it was a dream I had, but it was a family story that started it. I mean, it's our sister, and so who died possibly from indoor air pollution that made me decide to start the business. So my younger sister is running the business currently with me, and she's the current general manager. But when I started, I wasn't even thinking of it as a family-owned business. I was thinking more of, there's a problem, and I think we have the solution to it. For me, I think the reason why most global brands have actually excelled, I mean, you look at the IBMs, you look at the Johnson & Johnson's, and you look at, you know, most of these big businesses that have actually made names and they've gone global. It's simply because I think I'm not going to situate it only to the fact that it's because they are Nigerian businesses are not being that global. It's simply because of, I think, other exigencies in business. That's not just because it's a family-owned business. It's simply because of what it is here. Because if you even look at other brands that started from Nigeria, really, how many of them have really, really gone global? So that's another question we should be asking. So it's not about being family-owned or not. It's really about what the opportunities are and what the, you know, existing climate allows for people and businesses to be able to allow them to exceedingly grow. And then the understanding of how that business should be managed and how that business should, you know, be run currently to ensure that it is built upon. I remember a business like Eliza Day, for example. I remember when I was, one time I was watching a documentary about that business and how when the father started it, the children, I remember one of the daughters, I think the only daughter probably, was the general manager at that time. And the business was doing well. I mean, a lot of us know Toyota, and when you hear Toyota, you hear Eliza Day. When you hear Eliza Day, you hear Toyota. And I don't know how widely spread it is across, even if it is just the West African region. But this is what you find. I mean, it's done well for itself in the country. And I don't think it is simply because it is Nigerian that made it not to be external. If you talk about if there's a template or one thing that we should go through, I mean, I always say running a business in Nigeria is already hard enough. So if you're able to even grow it beyond a certain proportion and even service just the region, I mean, that is a feat that you can actually not quantify for anyone who has been able to manage them. I mean, we're beginning to see unicorns. We're beginning to hear things like the flutter waves, the pay stacks, and that is really gladdening to the heart. I've been so filled with joy when I hear these kind of things, because we're like, it means that this thing can happen. And I think now is the time, because, and that's why it's leading to what I wanted to say next, is that as we run our businesses, we should be open to innovation, open to learning, open to adding new stuff to the business, like just constantly thinking, what else can I do? And as family comes in, what are they bringing in? What is that person as a human being bringing in? What have they learned probably from their going to school somewhere, or maybe going to a Harvard? Or, I mean, most of us are running businesses and paying huge amounts of money in school fees and all of that. What are they learning and bringing back to the business if we want them to join the business, or if they want to join the business? How are they, using their knowledge to expand? There's a small Lipton advert, I don't know if people have watched it, where the father is an old carpenter and the boy is constantly like playing with his phone and all of that. And all of a sudden, this boy brings in new ideas of, new designs and all of that, and the business like skyrockets. So how is the family, what is the value the family is bringing into the business? It's also very important. For me, succession plan, it should be, I mean, there's no sentiments to this thing, right? It's a business. And so innovation has made it possible for several family-owned businesses to embark on long-term planning. So why are we not? Do that long-term planning, crunch the numbers, sit down, plan. What do you need to learn? Recently, because I'm a member of the Vital Voices Global Network, I was lucky to be given like 5 Johnson & Johnson team members to work with us on our business to help us grow this succession planning. We had to choose what we wanted them to work with us on, and I chose that. And you can imagine what they put us through, the grilling. We had like 4 sessions of them training us, and so we should be open to like learning that and putting that down on paper and saying, this is how we want the business to run. Let us not be sentimental about it. Let us try to disengage ourselves from the business. And it's your baby, fine, but your baby will get married one day, right? So let's learn to let that happen. And then we should build competitive advantage. Again, it's boiling down to lack of sentiment and being very serious about what we're doing. It's a vital instrument in developing competitive advantage for you to have innovation. And even though you're in the same industry with a lot, like in my industry now, it's becoming very competitive. But what am I constantly doing to be that value add? What makes me different? What makes me stand apart? That is something we constantly have to do. And there's no template that you're going to build up and just pack up in one shelf. No, it's a living document that you're constantly working with. And then it promotes products. I mean, you need to also promote product innovation. Today, I mean, 10 years ago when I started, a solar lantern was the most important thing. Now I am thinking about solar home kits that have television. We're thinking of adding refrigerators to that. We're constantly thinking, what do we do differently? What are the customers wanting? We're talking to customers and listening. What do you want next? What else do you want to be done for you? And, so that ensures that you're constantly also innovating, changing strategies, and, also fighting those factors that inhibit your family business from growing, like the lack of infrastructure, lack of poor financial management. That is one thing that pulls most of Nigerian family-owned businesses down. Financial management. So how do we actually start working and divorce ourselves from the business and seek expert advice? Recently, we're getting all on Hub to give us PwC to work with us in structuring the business. The guys told us when we had our first meeting, they said, guys, you guys need to start selling like bandits, And so you can imagine, and then they are giving us strategies and ideas on how to do all of this. We're separating ourselves from the business, like, the sentimental part of it. And then we're actually thinking of the growth of the business and how we can make it a global brand. When Flutterwave merged with PayPal yesterday, I was like, wow, I can sell solar lanterns to people in Myanmar.
Okay, thank you so very much, Abiba. And Oluwato, let me come back to you, and it's definitely a follow-up question on the discussion I just had with Abiba. She said something very interesting, and that is that it does not really matter whether it's a family business or not a family business. The challenges are the same. If you're going to go global, you're going to scale up. That is the same procedure, the same challenges. Do you want to buttress on that?
Yes, I'll just add a bit more to.
Or there are unique things about family businesses when it comes to scaling up that we need to watch out for. Or should we just assume that if this business succeed, it's not necessarily because it's a family business, and the other that does succeed does not necessarily because it's a family business?
Okay, thank you very much for the question. I hope you can hear me now.
Yes, we can.
Okay, so I agree to what Abibat has said. To a very large extent, you have to look at looking at the business itself, looking at the growth of the business itself. And she's actually very spot on. You have to make sure your business, you have to make sure you are creative, you have to make sure you are innovative. Okay, you have to make sure also that you offer quality products that meet global standards. That's what is actually needed now. So what I always tell some of the people that talk to me about they want to go into any business is to look at the need that you can identify. If you can identify a need for a particular class of people and you're able to kind of provide solutions to that need, then you can just start up. You have something that can actually grow into something very good. Now, talking about business for family-owned businesses in this instance now, there's now an additional layer of something that they need to worry about. Because in a family-owned business, fine, you have to look at the business, look at what you need to do, ensure that the business is sustained, ensure that you are innovative, you are creative, provide solutions and everything. But you have to also look at the workings of the family. Because if you don't get that right, even if you have a brilliant idea, a fantastic idea, the business can actually be run down. We have seen instances where maybe a family-owned business that is a real estate company, for example, and we've seen offspring, that is children, start to sell properties, start to do things that are kind of absurd, that actually puts the entire business in jeopardy. So because of this particular nature and unique nature of family-owned businesses, there has to be an additional layer, an additional level of check that needs to be done. And what I believe that needs to be done, okay, I'll also give an instance, for example, basically every business has their various level of growth. You can start from the maybe startup phase to the maybe startup phase to the eventual growth stage. That is where the company is actually fully expanded. Okay, and they also have the same level of growth segments also for families. So the family could actually start as a nuclear family. Now in the nuclear family, you have the father, the mother, the children. And then from there, you can also start growing to the extended format where you have cousins, you have more siblings, you have cousins, you have grandchildren, you have grandparents. Now you have to be able to manage the interplay between the family and then the family business to ensure sustenance. So what do I mean by that? I mentioned earlier on that the regular family, regular business, the growth cycle, you can have maybe the startup phase, the growth phase, the expansion phase, okay? And then if you look at the family business, a family may be in its early stage, however, the business itself is already at the expansion stage. So if that is if we have a family in that kind of situation, that means that the family business would have to source outside for people that will come and take care of things, would have to kind of look out for support, cannot actually rely on the family itself for anything to actually help to grow the business. Now, on the other side of this, you could also have a family that is kind of in the well-advanced stage, that is kind of the extended family stage. However, the business is just still thriving, it's just still growing, is in its early phase. And what happens in that instance? Pressure is put on the business to sustain the family. So if the matters such as this arise in family businesses, that's what makes them unique. And that is why an extra level of care needs to be put in place. Structures needs to be put in place to guide the organization, to guide the running of the family businesses. In terms of structure, I would say some form of family governance structures, such as setting up a family office, conducting frequent family assemblies, educating the heirs on the business itself and growing the business. Let them know about the business itself. And more importantly, there's also something that's very, very common in family business, which is what is called nepotism. So even though the offspring or the children have gone all over to gather knowledge, if they're not interested in the business and you force them to be in the business will collapse. If they're not adequately skilled to run the business and you make them to run the business will collapse. So matters such as that are actually dealt with when a proper family governance structure is put in place, which actually helps the family business to, one, on the business side, look at how to improve, look at how to be more innovative, how to be more creative. And on the other hand, as a family business, ensure that the family business is sustained, the ownership keeps to be, the family business is continuously owned by the family, and also goes to ensure that that proper structures is in place to ensure sustenance and transference to subsequent to succeeding generations.
Yeah, thank you so much. I'm going to ask just one more question, teacher. And Abiba, can you please just, I mean, like you said, you run a family business. Do you want to share any lessons or any specific experience that you think you have gained by running a family business in the last decade? Maybe there are one or two people watching us running family business or managing family businesses that you'd like to share with us. What are the unique insights that you think you can only gain by running a family business?
Never bring in anyone that has nothing to offer. That is so key. Yeah. You know, when I started my business, I started out of, I just saw a problem, like I said, and I thought I had the answer to it, and I thought to start. And I just went head on into the business. And it was later someone said, oh, you need to register the business. You need to do all of this and everything. And so we started. And at that time, I was badly burned from a certain experience. So I just put all my children. My kids were like, maybe the youngest was 1, the oldest was 5. Put my, it's possible here. And then my siblings and everybody. And I started the business, and I was just running it. With time, when projects started coming in, we got this very big project from a certain organization in the US. And I needed state coordinators in 5 states. And I put my cousins, because I thought, okay, I need to take staff. And I have cousins who have degrees anyway, so why not? I was being the good girl. And yeah, I got burned pretty badly. We lost that project due to my cousins because they didn't want to work at it. They were not willing to put in anything. You know, I should have divorced myself, like I said, divorce your feelings from emotions from the business and just, be head on and do what is right for the business. And so we got hurt really, really badly because we lost that project. It was about, at that time, $150,000 worth of project was a lot of money for us. So we lost that because most of them didn't want to do their work. I put 2 of them as state coordinators in 2 important states. And they were not just delivering, and they took advantage of the fact that it's my sister's own, And so, yeah, that's what I suffered, and that's what I learned. And, it was that time that I found out that they really didn't have any value to add, because they really didn't know what I really wanted. They didn't understand my vision. They didn't understand what the project even demanded. So that's one of the first things that I would say. And, always keep business to that one side, and then, the business and the family to the other side. It's really very key.
Okay, so Abiba, before you go, I will take your final comment, and I will take a final comment from Olayinka after that, and I will invite my boss, my publisher, to just say 1 or 2 things and close this session.
Yeah, I think
your own experience running a family business, and other family businesses that you are familiar with. What do you think is the outlook for family business in Nigeria? And would they continue to grow? Would they continue to scale up? And what are the pitfalls they should look out for? We're talking about structures. Structures are very important. We're talking about, you're talking about adding value, bringing in only people that add value. You also mentioned things about interest, if they don't have interest. So there are so many dimensions that we need to look. But given all this situation, what's the outlook for family businesses? Abiba, and I will come back to you, Olayinka.
I think the outlook for family businesses is like the outlook for all businesses. It depends on the interest. It depends on how far do you want this business to grow. That's key. And so I think it's a good one. A lot of people are struggling. And the good thing is, you can feel the vibe in the Nigerian entrepreneurial space. People are willing to do anything, like not anything negatively, but, putting their efforts, trying to grow their businesses. People want to communicate what offering they have. They want to communicate what value they are adding. People want to evolve. People want to grow. Everybody wants to be global. Everybody wants to, and as you do that, we need to all learn to set boundaries and, practice good governance and recruit from the outside. Very important, except if that family person proves their worth. I've seen people go out and decide, oh, daddy's business, I'm coming back to work with it, and build their own capacity very well to the point that they grow that business beyond daddy's expectations. Then you find people who are just willing for daddy to just pay the bills, and that's it, right? I remember one of the things that kept me going at the time when the business got very hard was one day my daughter followed me for a presentation. And when I stepped out, she was like, Mommy, can I work at Sose when I grow up? And that really, really made me feel very good. But now if you ask the same girl if she wants to work at Sose, no, she wants to be a painter. And I'm not going to force her, So let's be able to know that we can recruit from outside. It's okay. You can still grow and treat your employees like family as we grow on. Yeah.
Thank you so very much. Olayinka, do you want to, what was the outlook for family businesses? And I really want you to touch, close your argument. I want you to talk about this phenomenal nature or notion of most Nigerians wanting to own 100% of nothing, manage 100% of nothing. You have very, very small businesses sometimes. They just comfortable, oh, this is my home, even though it's in a way nothing. So what is the outlook? How do we ensure that culture, whether culture or tradition or structures are put in place to ensure that these family businesses can really, really scale up in the future?
Okay, so I believe that in Nigeria, the awareness is kind of starting to be there in terms of what needs to be done for family businesses to exist and then to continue to thrive. Now, I understand what you said. It is a traditional concept. A lot of people, a lot of founders, they don't want to, they want to be 100% owners of the business. And they also believe that, okay, when I start to kind of bring in one family member or the other, or maybe even get in some form of investors, I'm going to lose ownership, I'm going to lose control over my business. But there are certain, there are a lot of structures and mechanisms in place that addresses that right now, presently. The owners, the founders are still able to maintain their ownership or maybe even the control of the business, despite even other people being in the business, other family members being in the business. And the way by which this is also, they're able to achieve this, I'm going to talk a bit on it, is when they kind of set up some form of family governance structure, and they put that in place in the running of the family business. Now, I hear what Abibat has said in terms of when you want to bring in a family member into the business, you have to be sure that the person is adding value. However, when you set up the proper structures in place, you're even able to actually put laws down to actually guide who comes into the business and when. So I mentioned earlier on that basically about certain pillars in family governance. I'll mention a bit on them. There's a family assembly, which is a kind of forum whereby the family members gather together to discuss about the family business. In that forum, other family members are made to know about what is going on presently in the family business. They discuss what is going on presently, the next outlook, the next phase, what new investments are we going into, what do we need to modify, what needs to be done, what are the returns from this area. So that avenue allows and helps the entire family to understand the workings of the business presently and and the outlook of the business in the near future. Now, when you talk about family constitution, now that is kind of a set rules, a guide that guides the operations of the business. So in that constitution, you have laws such as when can a family member become an employee in one of the family businesses? What drives that? What needs to be? Okay, can an in-law, for example, be a shareholder in the company? What should we see before we can allow that to happen? What qualifications must family members hold before they can be a part of the business? Okay, it also guides rules such that, okay, when are we going to, if you want to kind of invest in another area, what needs to be done? So those family constitution actually is a very important document, and actually guides the running of the families. And if a family business is going to thrive, I would very much advise that they need to put a constitution in place. There needs to be a form of they have to be deliberate and intentional in actually now we can say, okay, informally we have these assemblies. Informally, I know what I want my family to do. I mean, the founder, I know what I want them to do. But without proper documentations of this thing, a lot of things is just going to fall behind the lines, you understand? So they need to actually be deliberate in these things, put these structures in place, and put this and put these measures in place to ensure the sustenance of the family. And then lastly, I would also say that advisory boards. Now, gone are the days where you just sleep and wake up and say, I want to invest in this area. Family now has they need to have an advisory board that guides investment decisions, guides investment steps, that guides them on that goes and that does research and guides them on the next place to invest in. So gone are those when the founder can just sit and just make a decision. So for what I see now in Nigeria, I'm seeing that a lot of businesses are actually getting to be aware, and I'll say the awareness is actually from the second generation, because most of for example, a lot of my clients, a lot of their kids actually schooled abroad, schooled in the Harvard and the likes of them. And when I talk to them about family governance, about the family business and making it to grow, they actually understand this concept. And they themselves are the ones that now have to kind of help me to even convince their parents to, okay, fine, we need to put these things in place. So I'm seeing a very positive vibe in Nigeria, and I see us growing in that regard.
Thank you so very much, Olayinka, and thank you, Habiba, and thank you all for the insightful discussion that we just had. And it is now my pleasure and privilege to hand over to Frank Aibogun, the founder and publisher of Business Day Media Limited, to give a closing remark and close this important launch of family-owned businesses in West Africa. Over to you, sir.
Well, thanks, Oro. There isn't much to be said after that fantastic conversation that you moderated, except for me to say thank you once again to Habiba and Olayinka. It's been a very well spent day today. A collaboration between Business Day and Asoko Insight for the launch of the first ever family business landscape report. The link to that report has been shared to everyone on this platform today, on this webinar, and I hope you got it. If you did not, please, colleagues at Business Day will be glad to ensure that you are able to download the report. It's quite a useful report. I think, as has been said, the outlook for family businesses in Nigeria is quite good. There is a growing abundance of capital to be injected, better talent, as was said a while ago by Olayinka. Children of the founders of the business are returning from Europe and America with decent education, coming back into the business. But we can do better to organize ourselves with rules, to improve governance, improve investment decision-making, and I have absolutely no doubt that the sky is not even the limit. Once again, let me thank you all, our panelists and members of the audience, and thank also Rob and his colleagues at Asoko Insight for this groundbreaking collaboration. Take good care, and God bless you all. Bye-bye.
Thank you.
Story Delight was actually started to tell innovative, exciting, and positive food stories out of Lagos, Nigeria.
Being the foremost luxurious goods company in the entire West Africa is a big deal.
Will you have every opportunity? No. But you see, the opportunities you lose on account of your value system, that's your opportunity cost for what you believe, and it's the price you must be willing to pay.